Hey guys, how are you? Andy Sukufana, CEO Y2K Credit Solution and a consumer credit expert. So, I have a great topic to talk to you guys about today. And this topic is important because 90% of my clients are in this situation. And they got into the situation because they were in desperate needs. Someone sold them on a dream that sounded great in the beginning, but 6 months later, it was not a beneficial or a good financial decision that they made. Now they're stuck, right? Now this topic didn't come from a client or a consumer asking me about it. I'm doing a topic because over the last couple months, I've seen the issue. It's an ongoing issue, right? Just over the last couple months, it's been more visual and more present than before. And due to the current auto industry, this may be the time for you to get out of the situation. So let's get into the topic. And the topic is upside down loans. What does that mean? To be upside down in a loan. And loan, when I'm not talking about credit cards, I'm talking about loans, a secured loan like mortgage, auto loan, student loan, boat loan, any kind of loan that has a collateral behind it, where you went to the bank, you wanted to buy something, the bank owns the title, but they gave you the money to purchase the property. Now you're paying the bank back. And installment loans are where you make a fixed amount of payment for a fixed amount of money. For example, you're going to use a car as a example because this is where my video is going to. My topic is leading towards all the consumers with upside down auto loans, right? So for example, you go buy a car, $20,000, $500 a month payment, 72 months. That's an installment loan with a fixed number of payments and a fixed amount, all right? And that has a collateral. If you don't pay it, the repo man is gonna come, take the car, they're gonna auction it off. Whatever the balance is on the loan, let's say the loan was, your balance is $20,000. We're using this number for argument's sake. Let's say you owe $20,000 at the time of the car being repossessed. You owe $20,000, but the car is only worth $10,000 depreciating value, or maybe the condition of the car when they repoed it, the condition of the motor it's not in the best selling condition, right? They're gonna put that car to the auction. They're gonna put that car in the auction. Let's say you owe $20,000. They repoed it. You only got $10,000 for the car at the auction. Your deficiency balance is $10,000. That's what the bank is gonna come after you for. You're gonna have to sign a check or settle that, and that's your responsibility, right? That's one. Two, you buy a car, and we know that, and I'm jumping around the video, but I'll get back to my point. And I'm using a car as an example. You purchase a car. We all know once you drive the car off the lot, it depreciates value, right? And depending on the loan that you have, honestly, I'm lying to you guys. 99% of my clients are in bad auto loans, upside down auto loans, and they don't know what to do, right? And I've posted this on other videos. We've posted on Instagram, and you're just hurting yourself, and you're just paying for an asset or a liability, I should say, because it's not an asset, it's a liability that you're never going to get that money back. So you need to cut that umbilical cord and get yourself together and get out of this situation. But let's continue the conversation. Let's say you buy a car for $20,000, right? And you have an auto loan from Capital One or Santander, Chrysler Financial, Ali Financial. There's a lot of subprime banks on the market that will write an auto loan because of your credit, your personal credit score and your auto credit score, right? Because it's derogatories on their report and you weren't able to satisfy a previous loan. You are a high risk consumer, so you're gonna get a high risk loan with high interest, right? High payments. So let's say you buy a car for $20,000. Auto loan, Santander Bank. Interest rate is 22.9%. You buy the car for $20,000, you drive it off the lot. Now the car is only worth $18,000. And the value of the car goes on slower than the interest on the loan you're paying. Does that make sense? It's more interest than the value. So now next year, you still owe $20,000 because of the interest, and you made a year of payment, right? You made a year of payment, but now the car's worth $16,000. That, my friend, is negative equity, okay? And 99.9% of you guys have that, because I see it in your auto loan, and I preach to you guys, and I tell you, after you finish fixing your credit, you want to buy a car, get in-house financing, which what that means is, if you're buying a car from BMW, you want BMW financing. If BMW cannot finance you, get your loan from the credit union. They're going to give you the best rate. So now, you have negative equity in the car. You're paying for a car that's not worth it, and if you try to go sell it, and you sell it for, I don't know, let's say you sell the car for $12,000, you're going to have to cut the bank a check for $18,000 to make up that negative equity. If you try to go trade it in to a dealership, you know, a lot of these dealerships, they talk that fast dancing lingo where they say, you know, hey, we're going to roll it into your new loan. But you're so excited to get out of the loan, you're not realizing that you're taking negative equity into a new loan, which means the new loan is going to have negative equity, which means you're going to be in the same situation that you're in currently. That's a no. You don't want that, right? So that's negative equity, and that's what you call being upside down in a loan, where that liability is worth less than what the loan is that you're paying, right? So that's a problem. We got to fix that. How do you fix that? It's really tough, because either you let the car get repossessed, get out of the loan right now, let them auction the car, and if you're gonna let the car get repossessed, or you're gonna trade it in, or you're gonna try to sell it to CarMax or Carvana due to the current crisis in the resale value for used cars, make sure you spend $250. Take that car to a good detailing company. Have that car detailed, make it look pristine, inside, outside, engine, and make sure it's running properly so you get the max dollar for that car, right? So how do we fix this negative equity that you're in? You either one, let the car get repossessed, but before you do that, you get the car detailed, clean, polished, serviced, running up the parts to get the max value. When they repossess it, they're gonna run it to the auction. So let's say they owe $20,000 on the car, they repossess it, you know, you owe $20,000 to repossess it, they get $15,000 at the auction. That means your deficiency balance, which you owe, is $5,000. Because you invested some money in the car, let them clean it up so they get the max value at the auction. If you didn't do that and they repossess the car and they sell it at the auction and they only get $10,000 for the car, then you owe $10,000 negative equity, right? That's deficiency balance that you owe. Now you gotta pay that. So if you're gonna let it get repossessed, make sure the car gets serviced and detailed, right? Bring it up to park, tell the bank pick it up, get out of the loan. Do not do insurance jobs, because the insurance company will penalize you on your next auto loan. Don't let anyone talk you into that. That's a big scam going on right now. Now these body shops are saying, give me the car, let me put a mechanic lien or a lien on it, let them come pay me, and they're gonna pay them storage. Don't do that. That's a scam, guys. And only person that's winning is the body shop and the body shop owner, because they're billing the life out of these insurance company, and the insurance companies will come after you currently and for the future. Don't do that. The next option you have to get out of this loan is, the first is repossession. We discussed that. If you want to do that, if your credit's already damaged, let it go repossess, because you might as well fix your credit all the way, then fix it partially, and try to stick into this loan. The second option is, same thing, make sure the car's serviced, cleaned, try to sell the car to CarMax or Carvana currently now to get the max value, because of the used market for cars. The demand is high, right? See what you can do. See if you can sell it there. Let's say you owe $20,000 and you get $17,000 for the car at CarMax or Carvana. That leaves you with a $3,000 negative equity, which is better than $5,000 or $10,000. All right. So try to sell the car to the Carvana, CarMax. I do not recommend you trade the car into a dealership for another car, because the dealerships are going to bamboozle you, give you that fast talk language, tell you, oh, we're going to roll the negative equity into your new loan. You're getting excited because you're getting a new car. Now 6 months later, you're upside down again, because you have a car for a new loan for $20,000 plus another $10,000, $30,000 you're paying on a car that's not worth $30,000, right? So And that, my friend, is what you call being upside down in a loan, right? And I always preach to my clients, and I say it on social media in all of our videos, before you finance anything, whether it be a purchase of a home, car, boat, whatever, jet ski, motorcycle, whatever it is that you want to finance, that you're going to have a loan attached to it, that you'll be paying a bank a fixed amount of payment for a fixed amount of terms, make sure you go into that deal with your credit being 720 or higher. Anything below that, at 680 and below, you're considered subprime. 680, 700, you're fair credit. 720, you're good. 750, excellent, you get the best deal. Take it from me, guys. I see it all with my clients, and they're in this situation, and you know they need to get out of it, because you're paying $800 a month for the last 12 months, but yet you still owe $20,000 on the loan. That's because the interest is so high. 90% of that payment is going towards interest. All right, guys? So that's what it means to be in an upside down loan and negative equity. If you have any questions about this topic, drop a comment below and I will try to get back to you. All right, if you like it, it makes sense, and you know someone that's in the situation, share the video, hit the like button. I appreciate it, and talk to you guys soon.